I've spent the last 24 hours building the most in-depth options trading platform and idea strategy that I possibly can, only using AI. We're going to be using Claude to find the best opportunities in the market today to buy something called Leap contracts. Now, what Leap contracts are basically longer expiration options contract. But today we're going to be focusing on long contracts, expecting the market to do well over the next 6 months until the end of the year. This is based on a few factors. After talking this through with Claude, we basically came to the assumption that the market conditions that we have seen in the first 6 months of the year are probably the harshest we will see for the rest of the year. But we can get more into those specific conditions a little bit later on. To basically start this off with Claude, the prompt that we're going to be giving it is basically saying you have $5,000 to trade options contracts on NASDAQ. Now, we want to focus on NASDAQ and, of course, US stocks as well, but we hope that Claude can identify basically some options contracts, most likely Leap options contracts, because those are sort of what is going to work best for us to be able to test these strategies out. We want it to use current prices. We want it to use all $5,000 of this budget to actually buy options contracts. And then, of course, we want to be able to find a way to map this out and track the success of it. We also want this to filter by options contracts that have the most likely chance of making money. We don't want anything that is basically a gamble. And then we also want Claude to explain why it has chosen specific things. We don't want it to sort of sit there and, I guess, pick 5 or 10 different stocks that have no idea as to why it's done that, no idea as to why those options might end up making money, basically no thesis behind it. So that's what we're looking for. Let's see what Claude actually does. Okay, here we go. We have the results. We have everything Claude has chosen. So we have Intel, JP Morgan, Costco, AMD, and Micron Technologies. We have the current share prices. We have sort of the allocation for $1,000 per one to basically allocate money towards that. And we are only doing call options. We are expecting these stocks to go up in price, and let's see what the allocation is. I've also brought up the interactive brokers. We can see that it is currently the pre-market, but you can see the current price for all of these companies. We are then going to basically compare this against the options spreads, basically the options tables, to see what sort of stocks, or basically what sort of options pricings are out there in the market. We can see things like Apple have dropped off massively over the last few weeks. Looks like it is selling down quite heavily in the pre-market. We then do have Nvidia that is up quite a bit. We have Amazon that is sort of trading sideways as well. And then TSM, or Taiwan Semiconductor, which has actually done really well over the last few years, but again, seeing like it has pulled back quite a bit. Nvidia is the more interesting one, but we now have the 5 companies that we wanted to invest in, focusing more on that AI technology route that could see explosive growth. So we have SoFi, Intel, JP Morgan, AMD, and Micron Technologies. SoFi is a really interesting one. Seems like this is going to receive about $1,200 to $1,300 of the allocation. Let's bring up the share price, and we can see that this has been beaten down quite a bit. So it is currently around that $17 mark. We can see that we can buy $20 options or $20 call options for SoFi, which is seemingly likely. And this is basically what Claude is recommending us to buy. So again, that expiration date around the 15th of January seems like a good time frame. It gives us quite a while where we expect the market to go up. We aren't necessarily buying something that is going to expire in the next week or 2 weeks. So it sort of doesn't have that volatility built into that pricing. And then, of course, we do just need to expand out the table basically to see what other ways there are for us to earn this money. What we then did from here was basically take a screenshot of those options pricing. We then want to paste this into Claude, and we can tell it to give us the specific options contract that it wants us to get. So we picked the exact SoFi contract. We have put in this screenshot, and then Claude is going to go through and change or basically give us a strike price and the option that it wants us to buy. We'll set it up so there are more options for Claude to choose from if it does end up deciding on something slightly different. I feel like this will also help just for the future, the other companies that we will end up deciding on. So we'll have to see what Claude ends up going with. But again, I feel like an allocation around that $21 to $22 mark might be a good option. So let's see what Claude has done. Looks like it is going with the $17.24 current price with a $17 strike price. Okay, so we are buying a stock in the money already, an options contract in the money right now, which is good. And it does seem like it has done the math on what we actually need this to do in order to make money. Now, if you aren't really familiar with options contracts, you might think that this one is already in the money and that we are going to make profit because we are buying it under the current price. But that is not how this works. We are buying an options contract in the money, which means it is a little bit more safe than something like an out of the money option. But again, we are paying a premium for that. We do still need it to rise above that strike price quite significantly for us to make money, which is why this is difficult. We then moved on to Intel. We did the same process again. We go to the January 15th expiration date. We take a snip or a screenshot of those options contracts and then pasted it into Claude, giving it again the opportunity to pick an options contract for us that it wants us to buy, and we will see what it decides as the best allocation for us. All right, so Intel, it looks like it has actually given us an out of the money options contract. It does look like this is going to be quite expensive. We might have to expand this out just so we do get more strike prices in here, because it does seem like anything that it is choosing right now is actually going to be really hard to make money on, or it is going to use up so much of our budget. So we might have to take another screenshot just a little bit further out, hoping for something a little bit more volatile, a big move to the upside. And again, this might be one of the riskier plays just based on how much money we're going to have to allocate this. And of course, I do want to make sure that we do leave money left over for other positions, but we'll see what Claude says about Intel. Okay, looks like it has made its decision. We are going to be buying the Intel 165 strike price. It is closest to the budget. It is obviously further out of the money than what we were originally going to do, but it does seem like it has a good allocation. It fits a decent amount of the budget, and we do need a significant move considering the current price is around that $105 mark. So it is going to be a big allocation, but I feel like this still has decent potential to actually make money as we move throughout this challenge. The next stock that Claude actually picked was AMD, but given how expensive the current stock is, for us to make money with this share price at around $500, we would have to buy options with the strike price around $900. This is the only way that we could buy affordable leap options and not blow our budget. So I feel like we might end up having to pass on AMD, one of my favorite stocks, and move this capital into something else, because that's crazy. So we then decided to drop AMD and move on to something else. We then decided to swap out JP Morgan and AMD and instead allocate that money to Google. Now, this is a stock that I have loved for a long time. I think Google is set to be a really big winner moving through the AI race, so this sort of seemed like a no-brainer. Again, we are taking those longer-term options contracts. This isn't as risky, but we are still basing this on Google's price increasing over the next 190 days for us to actually make money. So what we can actually see is that Claude is recommending we buy an option with a $440 strike price. Now, this is quite out of the money considering Google is trading around $359 currently. So by trading around that $440 option contract, we would need to see a significant increase in order to make money. This is a 27% increase for us to actually make money. So yeah, that is going to be quite significant. But let's move on to the next position. We then realized everything that Claude was giving us sort of seemed overpriced, so we needed Claude to find one more cheaper option for us. We wanted this to fit into the technology AI theme, but also something that fits in our remaining budget of around $780. This is going to be quite a challenge. We didn't want to use a stock that was highly leveraged, something that options traders could manipulate quite easily, because that is something that we do see in the options markets with some of these underpriced companies that do see a lot of volatility. So we wanted to find something a little bit more well known, and that is where we are now. We then found Netflix. Now, this might seem a little bit random, but I actually feel like this is going to be a good stock for us. Netflix fits into the technology bubble, definitely doesn't have the exposure to companies that are sort of overbearing with AI. It is still, however, a tech name, and this has been heavily beaten down over the last few months. So it did seem like a good opportunity to get into a stock that did have the potential, if the AI bubble seems to collapse or deteriorate a little bit, more people might actually end up going into these companies that have been beaten down and proven technology companies. So that is why I feel like Netflix is a good play. It is sort of almost like a hedge on the other positions, and there is so much potential here. Netflix has always been a well-performing company, so let's see what Claude thinks about this. It looks like Claude gave us an $82 call option. Now, this might be one of the better plays that we do see. We're then going to get Claude to break down all of our calls and create a table for us so that we can easily track them. And it does seem like Netflix is going to be one of the more specific companies that we actually can make money on, that isn't sort of this crazy expected, or doesn't need this crazy, basically once in a lifetime move for us to make money. So we can see SoFi, we need a 22% move. Intel, we need a massive 66% move. Google, a more modest 27% move. And then finally, probably the most realistic one, we need a 17% move from Netflix over the next 190 days in order to make money. Now, we are going to build out a full plan to see if we can actually do this and then allocate some money towards it. Okay, so this is basically a brief summary of everything that Claude has done for us. Now, this is after all of the research, after looking at different options contracts, and then showing Claude basically what we could actually purchase through interactive brokers. It has then performed basically everything I've asked it and developed something called the options ledger. We have 4 long calls, all expiring on January 15th, 2027. We can see here that this is 27 weeks out. This is the total cash deployed. Now, this is USD, so if you are dealing in AUD, then obviously this will be around $7,000. We have the total positions of our break even, which is 0 because we just bought these options contracts and are going to simulate the results for this. This is the average move needed per stock or per contract in order to make money. And then this is the days to expiration. Now let's talk through the options of what Claude actually picked. The first one is SoFi. This again is a big tech stock. We can actually see that the starting stock price here when we bought these is $17.24. We have a stock price of, or a strike price rather, of $17. So these are already in the money. We have paid $3.95 for these options contracts for a total cost of $395 per contract. Now we are buying 3 of these contracts, which is why you can see up here in the top corner, the total price deployed is $1,185. We need a break even of $20.95 for us to actually make money on this, which means by the end of the year, we need a 21% move in order to make money on this. Now, it might seem crazy, but if we actually bring up the SoFi chart, this will start to look a little bit better. So let's break down each one of these picks. Firstly, let's load up interactive brokers, and here we have SoFi. This is basically the performance, and if we do branch this down over the last 4 hours, you can see that this stock has been very volatile. At the start of the year, this stock was all the way up around $30, $25, $30. We saw a peak early this year in January to that $30 mark, and it even went as high as $32 and around 80 cents in November. It has had a steep decline since then. We can basically see it has gone down 43% from its peak, which is crazy. So basically, over the next 6 months, which is all the way down to here, we just need this to go basically, as we get the ruler tool back, we need to go from here all the way to, where is it? 19th, and we need it to go to about there. So in the grand scheme of things, not a massive move. Definitely something that would happen. We also do have earnings coming up very soon for this, I believe, then earnings again later in the year. So we basically have 2 opportunities for this stock just to see some crazy growth, and we'll see what happens with that. That is Claude's first pick, SoFi. Let's go into pick number 2. Now, this might be the riskiest one on this list. This is Intel. Now, if you guys don't know, Intel is one of the more volatile stocks that we have seen in the market lately. For this one, we have a starting stock price of $106.60 with a strike price of $165. So these are far out of the money contracts. We need a massive move in order for this to actually make money. And Claude basically understood this and was willing to allow $1,400 of our capital to go into this as sort of a longer term play. Intel has been highly volatile. We've seen a crazy move on this stock already. So as I bring up Intel, let's have a look through this. You can see how volatile this is. It has been a very poor stock for a long time, trading down to $40 and then all the way up to $140, all the way at its peak in the end of June and the start of July. It has then since fallen down quite a bit. So I feel like seeing this as an opportunity, we do need this to rise quite significantly. Again, seeing that 60 or 70% increase, and we basically need it to go all the way up here. Yeah, that is going to be a stretch, but at least Claude acknowledged this and was able to basically acknowledge that this is the riskiest out of the 4. Moving on to our next stock is Google. This is already one of my favorite positions. A starting price of $359.40 with a strike price of $440. We have paid $16 per option on this, allocating a total of $1,600 for this and a break-even price of $456. So about a $100 increase from where Google is right now, a 26% increase from what we are seeing today, which again might seem big and dramatic, but considering how good Google has performed this year, I don't think this is out of the picture. We saw it trading as low as $260 back in March, all the way up to $400 in May. So seeing a move up to around $460 might be crazy, but it seems like that is where Google is sort of destined to go by the end of this year. So again, we could see a big move up into the right and into that money position. We're going to have to wait and see how the rest of the market performs. This again is one of our bigger allocations, $1,600 to this. And then that takes us to our last play, which is Netflix. The starting stock price for Netflix is $76.34. We have seen a big decline in Netflix over the last few months. $82 is our strike price, paying $7.80 per option. Our break even is at $89.80, and we need a 17.6% move from here in order to make funny. So if we have a look at Netflix stock, this is one of the most beaten down stocks that we have seen this year. You can see how high this has gone in the past, trading all the way up to around $130 this time last year. It got up to about 110 only a few months ago back in April, and it currently sits around $75. So again, by the end of this year, we need it to just increase a little bit to around that $88 mark. Marginally not a huge gain considering we were at this level basically in May. So even if it doesn't break all-time highs, it basically just has to sort of increase a little bit, potentially have a good earnings report coming up, see some sort of growth or catalysts or future projections that inspire a bit of momentum to the upside, and we would hit this very clearly. We can see that July 17th is when Netflix does report earnings, so we're going to be keeping up to date with everything that they have. The coolest thing about what Claude has built for this options ledger as well is this week's price. Now, what I have done on Interactive Brokers is broken down everything into a watch list that we are tracking. You can see all of these right here with the bid and the asking price, and of course the last price for these contracts. We can then compare them to what we have at the moment. So let's have a look at Google for a second. Now this chart looks horrendous because that's how all options charts look, but we can see that currently this is at about $16.05, whereas here it was, we can actually just put in this week's price for Google. So let's go back. I thought it was going to track the options price, but for whatever reason, it is actually tracking the stock price. So let's go back to Google and we can just put in the price that we see in the pre-market. 356.80 is the current price. So if we put 356.80 and log price, we can see that we are down 0.7% versus entry, and it keeps this as a history. So I'm going to go through and add in all of these, and we'll see where this takes us. All right, so we have logged everything in here, and we can see how this has changed. We are up 3.5% on our SoFi options. We are basically at this level, and this tracks what we need to get to that break even. 17.6% needed to go. So this is already updated. Intel again has seen a decent move. We only need 57% to go from here, which is crazy. Google is down. We need a bigger move now to make some money on this, and same with Netflix. But that is our plan. That is what we are doing today. And I'm so excited to see how this challenge goes over the next few months. So if you want to keep up to this, make sure to hit the subscribe button because this is going to be crazy.